Okay, welcome everyone. This is Thomas Hyman with Realty Partners, and I'm very, very excited today to have with me Yvette Clermont. Yvette is a seasoned industry veteran. She's been in the mortgage industry since 1997 and since 2012 with Inlanta as an originator and a branch manager. And she has an office in De Pere, Wisconsin, and Lakewood Ranch, Florida. She's a certified mortgage planning specialist and is heavily involved in MORPAC, and she enjoys going to Washington, D.C. to lobby for better regulations. And I'm just really, really excited to have her here with me. Yvette,
Yes,
how are you?
I'm well, Thomas. How are you?
Excellent,
Thank
excellent.
you
So tell me,
for having me.
what, well, I'm glad you could make it. So tell me, what in the world motivated you to get into the mortgage industry in the first place?
Well, it's kind of a funny story. What happened was I was very young. I was still in school, and I wanted to buy a home. And the realtor that I was working with recommended I go and speak with this loan officer. And I went and sat down, and I brought all my stuff, and I was so excited. And I had all of these ideas of painting my kitchen and putting up a fence and all of these thoughts. And he said, "No way, you can't afford anything." And he pretty much just shut the door on my dream. And I thought, this can't be right. They're just this it shouldn't have gone this way because I don't even know what to do.
Hmm.
And I really at that moment I decided I was going to get into lending. It's really funny, but that's exactly what motivated me to do it.
Wow. So you just went step by step, bypassed the whole mortgage broker thing and went straight into the lending side of the business.
I did. Yeah.
Okay. And now you're originally from Wisconsin, right?
I
How,
am.
how long ago did you move down here to Florida, and what motivated you to run your business in two states? I mean,
Sure.
that's pretty exciting.
Well, that is an interesting question because I get that asked a lot. But really anyone from the Midwest, you understand how awful the winters can be. Summers are
Yeah.
fantastic. Falls are beautiful. Nothing can beat Midwest golden color leaves falling down. It's just gorgeous. But the winter is hard to take. And my husband and I we had some good friends who moved to Florida, and of course everyone from the Midwest vacations in Florida. You have a tendency to come here. And over time, we just kept coming in more and more. And we said, we could actually just live here all the time. It's not just Disney in Florida. And so about after our number four and graduated from high school, we said that's it, we're done, and we packed up full time to come here full time about 5 years ago. We haven't looked back. Love it. Still, a Midwest girl at heart. Still Wisconsin. Go Pack. But this is definitely a lot nicer, especially this time of year.
So you still have an office in Wisconsin, right? So
I, I
you're in
do.
both places.
I do. I have I'm lucky that I have a great team, so we have kind of a unique situation in that I'm able to continue to go back and forth between the two states. I try not to fly as much to Wisconsin in the middle of January and February and even March, but I'm up there a fair amount to to see my clients there, and I still have family there, and it's still my other home. But
Wow.
the team concept has allowed me to do that. I'm very lucky for that.
Well, and thank God, for technology. Now, I have to tell you, I have now worked with, God, countless mortgage professionals since I got into the business in 2003,
Mhm.
and even before that, just as a consumer. And when I first heard about you, one of my agents said, you really need to talk to Yvette. You need to talk to Yvette, and I heard that for about 3, 4 months, and I finally said, let me sit down and meet with you. And I was just completely blown away by, you know, your system, your structure, your attention to detail, because most mortgage people that you work with are just kind of flying by the seat of their pants, and everything happens at the last second, and that's when things fall apart. So tell me, how did you come up with your system and your process, and what was the influence there? Because you really are outstanding in that respect for sure.
Organization is definitely the key to success in real estate. Whether you're on your side as a realtor
Yeah.
or on our side as the lender. But really, what it has come down to is I've been a lender since 1997. I joined the industry, and every time I kept reviewing when things went wrong to say what could we have done differently. If we had bumps along the way, and a lot of times it was always based around information, that someone was missing some of the information that they needed, to avoid that problem. And so as that happened, we kept, building in a new system to ensure that that same problem never happened again. And that process has become very detailed and very, it's elaborate, but that allows us to ensure that we have what we need along the way to keep things moving along.
Sure.
It is a challenge today to get things done, and having that organization of we have a process in place right from the start, right from day one.
Well, I'm a big believer in processes and systems. I think that having a bad system is better than having no system, because at least you can measure it and see where do things not work and what can we improve upon.
Right.
And so, again, working with you, I just noticed from the very first time that we met, and your presentation and that binder that you provide for your buyers that just have an incredible wealth of information. It's just really unlike anything that I've seen so far. Now, what would you say to anyone that wants to get into the mortgage business? What would be some of the things to look out for, or tips, or key to success to other mortgage brokers or professionals that maybe want to model your success a little bit?
Sure, absolutely. The setting up a system right from the start. I think so often people get involved, they get busy, and they don't have time to work on systems. So I think putting even a small system in place to start, and that can just be at this stage of the game I'm going to touch in, at this stage of the game I'm going to do this, and then sharing that information with your referral partners, letting them know what you're going to do each step of the way, and then actually do it. That's the most important thing, is actual execution. You can come up with all kinds of plans, but if you don't have an ability to execute, then that won't work. But it's gaining that trust, and the way to gain trust is by actually doing what you say you're going to do.
Now you use technology a lot, and I believe I forgot the name of the system that you use, but you told me it's basically Salesforce.com, but it's a version for the mortgage industry, right? Right,
exactly. It's the mortgage planner, CRM, yes. And really, there are so many systems. It's really whatever system you use, just use it and set it up properly right from the start, and always review it. We meet quarterly to discuss what needs to be changed, what should we adjust, what should we add, what is helpful, what isn't helpful. And I ask our clients for that feedback, and our referral partners. We ask, is this helpful information at this time or this stage of the game, or should we, is this not the right time for you to get that information? We're always asking for that feedback so we can make that process work even better.
The constant and never-ending improvement is key.
Absolutely, and asking. We do in the middle of the process, we do a survey with our clients and ask, how are we doing? Is there something we could be doing better? Do you like the way we're communicating with you? Do you need more communication? Do you need less communication? And we ask that because each client is a little different, but and it's hard to tailor-make every system that you put in place tailor-made for each client. But we can get an overall feedback from from our clients and make sure that, again, that information is helpful and warranted.
So what do you do after you close a transaction? Do you still continue to follow up with your clients? Do you have a follow-up system for that?
We do. And that's really important because you've now gained their trust. You've gained your client's trust. You've gained your referral partner's trust. You don't want, if you say that you're always going to be there for them and then you're not, well, then again, you're not doing what you say you're going to do. We say we're going to be there. We say our team will be there to answer questions or review other options. Just be there. So you really need to. Again, it's a system. So it's a system of touch points of when we will contact them to make sure that we're there when we know they're likely to need us.
So obviously, being able to use technology tools like Salesforce, you're able to do things today that 10 years ago really would have been almost impossible to do if you had to do it all manually,
Absolutely.
Unfortunately, a lot of people are still doing their business today the way they did 10 or 15 years ago, and that's a big problem, I think, in being able to deliver
it can be done, but
consistent service.
it's labor intensive.
Yeah, yeah. So, talking about time, the last time I got a mortgage myself was about almost 9 years ago, and that was during the time when you could just fog a mirror and
you had a pulse.
You know. And it looks like the pendulum swung the other way a little bit. What are some of the key changes that that you witnessed over the last 10 years in the mortgage industry?
Well, we've definitely experienced more changes than, I mean, and it's continuing to change. But the over documentation of files has really made everything very challenging, because we might ask for documentation that we need or our underwriter needs, but if we don't review that documentation very clearly and ensure that we're not going to get yet another condition once we supply what was just requested, and that can happen. So it's really that's probably one of the larger challenges that I hear from other people in our industry, is just knowing for certain what we need to make sure that that file or that condition will be cleared. So understanding the documentation, understanding the client, and then making sure that that is conveyed effectively to the client and all of the partners that are involved in that transaction. Waiting for documentation is something that we do every day. So it's setting deadlines. It's helping ensure that the clients understand it is more difficult today to obtain a mortgage. So what we ask for, we need a lot of clarification from our clients, and that's something that is a challenge even for borrowers today. They don't even understand what they don't understand what we're asking, and they don't understand they have to give us every little bit of information. We really need it all, so we can help them get through this barrage of paperwork as effectively as we can.
It's just crazy, I guess a lot of people also, if the last time they got a mortgage was 8 or 10 years ago, they just remember, well, I just provide this information and it's going to be easy peasy. And now you're asking for, everything under the sun, and then it seems 3 weeks later maybe they'll have to provide it again. Well, I just gave you my pay stub. Why do you need it again? And so I guess setting expectations is probably a big thing. So that's what you do when you meet with clients initially, right?
Right. Setting that expectation that what we ask for, we really do need. But the other part of it is ensuring that you really get to know your client. That's certainly that's a requirement for us anyways. You have to know your client. You have to know your borrower. That's something we talk about a lot in our industry. You have to know who they are, and really understanding, asking questions, making sure that we really have a clear picture of their entire financial being. That's important for us to know, to ensure that we're recommending the best program for them, and that we can tell them up front what we're going to need. I've had clients, down the road, there's things that we do now that we never did before, such as fraud detection. We pull tax return transcripts directly from the IRS now to ensure that what we have in the file versus what the borrower has given us, or what the borrower gave us versus what the IRS has, are one and the same. A lot of times we find out information on there that the borrower never thought they would have to share with us, like they own a cabin up north with grandma and grandpa, or their brothers and sisters, and it has no lien against it. It's still something we need to know, because there's liabilities against that property, there's insurance and taxes, things like that we need to take into consideration in the underwriting. And that's just something that those questions maybe weren't dug as hard before as they are now. The idea. So you have a lot more responsibility and burden to gather things now that in the past you could just take the buyer or the borrower by their word, and now you actually have to verify it. We do, and that's hard, because we gain that trust with our clients, and we don't want them to feel that we don't trust them, because we've asked them to trust us. But we're saying, yeah, you trust us, but we don't trust you. And so it's, and you feel badly about that. And the idea of why we need it really makes sense. We really went into a bad, dark place years ago, and we want to make sure that we don't go back to that. And that makes sense. The problem is the vehicle we've used to get there has become very burdensome for us all. But if everyone understands that and can get that information up front, and that's part of that setting expectation you mentioned, that we're going to find everything out on you, so just tell us. Just tell us up front. It makes it a lot easier. So
on the subject of changes, you know, this is all stuff that affects the buyer or the borrower, but there have also been a lot of changes that affect the relationship between real estate agents and lenders, and you put a great post out on your blog just yesterday, I think. And the middle section was about the Consumer Financial Protection Bureau and
Yes.
and the crazy stuff that they expect us all to do. Give me some
And we
thoughts
do.
for the benefit of other real estate agents watching this. What are some of the big changes that happened in there?
Well, you know, again, it's if we have any kind of shared marketing, you know, and a lot of things are just done very innocently. We want to work together for the best, to get that information, the best information out to our clients. So ensuring that we are abiding by the CFPB's rules for any kind of you know, anything that could be construed as that we are attempting to sway a client one way or the other, whether you know, we're trying to sway them to a real estate agent or a real estate agent's trying to sway to a specific lender. The most important thing is to ensure that that all clients understand they have options, that they're not being pigeonholed to use one specific type of lending institution or one specific type of realtor. So it is a challenge because, again, we're coming from it on the side of, hey, we just want to get great information out there. We want to show what great work we can do for our clients, and these are people that we recommend for services. But we also have to ensure that we always have those correct disclosures in there, that no one's being, you know, they don't have to use any specific lender, real estate agent, title company, that they have those choices. So that, again, the idea of the rule, just like it is for on the lending side, makes perfect sense. We want to make sure people understand they have choices. The delivery of it gets a little bit complicated on our side to make sure that we read that rule clearly, we understand the rule, and we're abiding by it to ensure that we aren't putting ourselves into harm's way just simply by trying to help clients.
Well, I guess, you know, one big issue too, and as you know, I owned the title company for many years. You know, the whole RESPA regulations used to be enforced by HUD, and there was some ambiguity about, you know, what means, and then when the Consumer Financial Protection Bureau took over, you know, they started to really just crush providers that did anything that was even remotely questionable. And I remember I remember in the title side, what really was a big wake-up call that there's a change of tide was, you know, in the title industry, title companies cannot provide anything of value to a real estate agent with the expectation of getting business. I mean, you can't even buy them a cup of coffee, technically speaking. But title companies, by and large, used to have marketing reps that you know, went out there and drum up business. They're you know, commissioned salespeople, and most title companies were paying them as independent contractors. And so the Consumer Financial Protection Bureau took exception with that, and they went after a couple of title companies and crushed them because they were paying their sales reps as independent contractors, and they were saying that you know, any payment to anyone for the referral of title business, even if they're a salesperson, is illegal unless they're a W-2 employee of the agency. And
all of it is, you know, and again, the rules are there to protect the consumer, and and the thing is it's hard for people who are really actually protecting the consumer to, you know, to feel like, well, come on already, that seems so silly. But unfortunately, it only took a few bad apples, you know, who were you know, we're doing things wrong to put these rules in place, and now it's, you know, you're right.
It's swinging the other way, you know.
Yeah.
So
we'll get through it, you know. But when in doubt, you got to call call your legal advice, because it is one of those things. You do have to understand the rules, and the rules are there to protect the consumer, which is exactly what we want to do. So we just have to understand what's right.
I mean, to me, I think to me the biggest takeaway is that, you know what, forget about marketing agreements and charging others for you know, websites or services or all these things that were done in the past, and just, you know, if you select a professional to work with, it really truly ought to be just on the merit basis alone. And you know, I saw an interesting article this morning where Mark Zuckerberg was at some conference and he was interviewed and asked him, what is his criteria for hiring people, and he said, anyone that he considers to work directly for him at Facebook, it has to be the kind of person that he personally would want to work for them, and and so and I'm thinking in terms of as a real estate professional, if I were to work with a mortgage lender or a title company, would I want to work with that person for my own transaction? If I myself were to get a mortgage, refinance my house, or buy something, is that the person that I want to do business with?
That's good criteria.
And I think if you do that, you can't go wrong. And again, I was just blown away with the experience I had with you when we first
Thank you.
connected. Now, the big thing over the last couple of years has been not only buyers having an incredibly hard time getting financing, and sometimes financing taking forever to come together, like USDA financing, for instance. We've had transactions that would take months and months and months. But then overall, it seems like a huge percentage of transactions fall apart and die literally like at the last hour. And what would you attribute that to? Why are so many buyers having that experience that they think they're approved for financing, they move forward, and then 2 days before closing the hammer drops and the underwriter says, no, we need X, Y, Z, or we can't do it?
Right. Yeah. I've definitely heard those stories. I've saved some of those deals.
Yeah.
A lot of it comes down to that inability to see the forest through the trees. And what I mean by that is that really it comes back to knowing your borrower. That is absolutely key, that we understand as much, and we gain that trust early, within the first conversation with that borrower, that we understand, or that buyer, we understand their whole financial picture. That's key, because if you aren't asking all of the questions that need to be asked as a lender, there's things that will be found throughout the process. Sometimes, again, it's innocently, where a borrower just doesn't realize that would be something important to convey. It could be that a lot of times that happens in the end is not mistakes, just simple mistakes that, again, could have been avoided if that lender would have educated the borrower properly, such as don't go and apply for a credit card for your new furniture. Or I had one even more innocent that happened, that can even happen in our case, that we changed our process. Last year we had a client who co-signed for his girlfriend's auto loan, not realizing, and he said, well, it's not my loan, but you're a co-signer, so it is your loan. And that was one of those things where I had to change my process, because we realized we were saying don't go apply for any credit, don't open any new loans, don't do this. The borrower thought, I'm not doing any of that. I'm just co-signing for my girlfriend. It's not my loan. And again, a lot of people would say, well, borrowers should know that, or they should ask questions. But really, it really comes down to us. The responsibility is still on us as the lender to ask those questions and make sure that we're educating the borrower in the process. That's why I give out that binder of all that information up front. So we are giving that information to those borrowers to avoid that end of 2 days before closing, because we will in most lenders will do what we call a soft pull credit report no more than about 5 business days before closing, to just do a snapshot credit report to see if things are different from where they were maybe when we pulled credit 2 months ago. And if those balances are significantly different, they may no longer qualify. So again, that's having those systems in place to ensure that that conversation is being had with each client. Absolutely.
Well, so over-educate and over, everything. Just like over-communicate and.
Yes.
No, I mean, that's a big challenge. I mean, you have, and obviously your process is very different. I mean, you even have a way to actually pre-approve borrowers all the way, through underwriting, if I'm correct. But yes. Most mortgage brokers, they provide a, quote-unquote approval letter, and the borrower thinks that everything is okay, and in many cases, if they present it to the seller, it will actually
Right.
void the financing contingency on the contract. They could lose a deposit. And then, the mortgage broker is slow in collecting documents and everything gets pushed off until the week before closing, and then the big hammer drops. And so you got to be very proactive. How soon before somebody, let's say I wanted to purchase a property this summer, how soon before I write my offer should I work with you to get pre-approved?
Well, I recommend at least 6 months. And the reason for that is everyone has a lot of layers. There's rarely someone who has no layers, no challenge. Some kind of a challenge is present in virtually every file. So
Okay.
early in the process, with having, I want to review the documents, I want to review the taxes and insurance, I want to order those tax transcripts ahead of time. It costs us money and time is money, to do that early in the game. We hope that the client will stick with us when they're ready to purchase their home, but they may not, and they certainly don't have to. They could, we may do all of that work up front, and maybe they decide not to buy. That's okay. I would rather invest that time and energy up front, knowing that they're truly in good shape, versus having them, finding out well into the process that they're not. That's very frustrating. I've had borrowers say they've been pre-approved by another lender. They thought they were a regular employee and with a W-2, which again, a lot of this is our jargon. This is words that we use in our industry. The borrowers don't necessarily, they don't think of W-2 the way we do. I've asked lots of people,
Sure.
Give me your W-2s, and they're like, what is that? They just don't, again, understand the jargon. So they may think they're a W-2 employee, which it means that they, are receiving an hourly wage or a salary. But then when I get their taxes, I find out they actually are 1099, which means we treat them as self-employed. That's a completely different type of underwrite, and we could have some potential issues with that type of borrower, depending on how they report their income on their IRS, on their tax return to the IRS. So
Sure.
I've had it where people said they were pre-approved, and then I say, let me see your documents. And then I find out that they really weren't pre-approved. Maybe their previous lender took a look at credit and heard over the phone that, yes, I make this much money, and said, yeah, you'll be fine. Well, until I review those documents, I won't say you're going to be fine. I want to make sure of that and pass that on to the partner that we're working with, who's out driving them around, showing them homes, that they're truly ready to purchase. That's key today, more than ever, again, because there's not a lot of backup plans, where it used to be, again, back when you mentioned getting your mortgage when you had that pulse, if you didn't qualify for a conventional loan, there might be another backup option for you, let's say.
Mm-hmm.
There's not a lot of those available anymore. So it is, we do have to make sure that they qualify today, based on today's complicated standards, and we want to do that up front early in the process.
So do you ever get pushback from buyers when, like, okay, I know my credit score is 820, and I don't want anyone to pull my credit, and I'm going to wait until I found the house I want to buy. How do you deal with those type of buyers?
I tell them all of the stories of people who are just like them, that it didn't work out. Because some people's lives are to serve as an example to others, and I try to keep those in my Rolodex in my head of, okay, let me just tell you a story here about why this might not be the best idea for you, because I had this happen before. So experience, my experience helps to show people that taking a few moments, taking that time to look at their documents, getting those in early in the game is going to it's going to eliminate a lot of the stress. Absolutely.
Well, I mean, as you know, I preach to our agents that, and anyone, that you really should never, ever, under any circumstances, even show someone properties unless you have a solid pre-approval or proof of funds. If they say they're cash buyer, okay, provide me with proof of funds.
I've heard that before. I think that,
because you need that anyways in order when you make the offer, And I think a lot of agents are afraid to ask their potential buyers too many questions or be too, firm, because then they might go and work with someone else.
Mm-hmm.
But I agree with you. First of all, it's worth to put in the work up front to ensure that they'll be able to actually purchase the property they want to purchase. And I think also, if somebody doesn't want to cooperate, then they're not meant to work with you. I mean, do you turn people down?
If in that example, you mean, like if
Yeah,
someone.
yeah, if somebody's difficult, they don't want to cooperate,
Yeah, I
they don't
think
want to
that
provide you with the
sometimes,
information.
there's people that, you can't connect with everyone, and sometimes it's a matter of, I've had that conversation where, I may not be the best lender for you. Let me give
Mhm.
you a referral to someone who, maybe does business a little differently than me, that maybe you would better connect with. I think sometimes you have to do that. I think that's good for your own sanity, and in the end, it's good for them. You're actually providing them better service by letting them know this isn't how I work. I'm going to get you to someone that might be a better fit for you. I think that's a good
And-
conversation to have up front when you're just feeling like this isn't going to go well.
Well, but you're obviously very well armed with your collaterals and your presentation and the process that you work through. That I would imagine that most people will understand the wisdom in that and move forward and cooperate. What are some of the other things that buyers need to look out for when deciding, who to get financing with? I mean, let's say, I mean, I know you have a very consultative approach and you kind of partner with the buyers early on to make sure that they're really ship shape when it comes to making an offer. But if you're talking to a prospective buyer, let's say in California, so you're not working there, what are some of the things that they should look out for in selecting the right mortgage professional to work with?
Sure. I think that making sure that whatever lender they choose is someone they can connect well with, on a level of they're giving you the information that you need to make a decision. They're giving you options. They answer the phone. They answer your emails. That they have a clear system in place and they have experience. Now, that doesn't mean someone brand new right out of the gate couldn't be a good lender. They certainly could. But if they were new, and I would ensure, okay, you're newer in the industry, do you have an advisor or someone helping you if my deal gets a little bit complicated? And
Okay.
so I would ensure that if they really felt comfortable with someone who was newer in the industry, whether it be a realtor or a lender, just ensure that they've got their arsenal packed with assistance if they do run into something that they haven't seen before. That's really important. But I think experience is key, and if they don't have that experience, then they better make sure that they have proof that there's someone else there who does have that experience that can help if they do trip up.
Okay. So let's say if they're interviewing a lender, what would be a couple of good questions to ask?
Well, sure. Outside of all of the typical questions of here's my scenario. This is roughly where my credit is. This is roughly what I earn. What are your terms? That's important. People want to know what are your terms.
Sure.
As far as lender to lender, we should all be very, very close to the same. We don't have the high highs and the low lows anymore, where someone's at 3 and someone's at 5. You don't really see that. You're going to see an eighth, maybe a 0.25% swing on interest rate from lender to lender, but that's not unusual from day to day and how their loans are priced. But certainly that's an important question to ask. But then, the other questions are, just again ensuring they've got the products that, if they've got a really unique situation, that they have that ability to maybe ask, hey, give me an example of someone that's just like me that you were able to help.
Great
Question them a
question.
little bit. Mm-hmm.
So you mentioned rates. What is a good time to lock in a rate nowadays? I mean, are rates jumping all over the place? Should you lock them in as quickly as possible, or what is your
It
rule of
depends on
thumb?
the need of the borrower. When we're looking at that, and that question gets asked, what is my recommendation? What is my advice? It depends on the borrower. It's hard to chase the lowest rate ever. So if you have a contract and you know when you're going to be closing, lock in when it feels right for you. Don't try to get the lowest rate ever, because all of a sudden it'll start doing this, and you'll get nervous and you lose. It's like Vegas, I mean,
Yeah.
you kind of have to know when to hold them. And I make the recommendation: lock in when it feels right to you, when you're comfortable with the payment, when the term is right, and you're locking in for the amount of time you need to get you to closing safely. Some people like to wait until the last moment, and you have to check with your lender and see when is that last date I can lock in order to close on time, because again, we have certain disclosures we have to meet. And so that does matter, but it's really talking about talking with your lender and what's most important, and getting that recommendation, watching those rates, and locking in when it feels best for you and you're comfortable with that rate and those terms.
Got it. Got it. And again, rates they're not all over the place anymore, so you're not going to see a 1%
Not right now.
difference between
Never know.
them.
That's just it. You just don't know. That's why you got to lock in when it feels right.
So, what would you say are your personal keys to success, to your success as a lending professional?
You know, I'm very tenacious, and I put. I have a really great team. I put a lot of faith into my team, and we work. We have a lot of fun, and when you have a lot of fun, you can get a lot done. And you know, we don't like to say no. I don't ever want to say no. I have my husband and I. We have 5 children between the two of us. We said no a lot, you know, because with all those kids, you say no a lot. So I don't like to say no. I want to find an opportunity, and if there isn't one right now, and that happens, then I remember that conversation comes back in my head of that lender telling me, no, there's no way you can buy a home. That comes back to me, and I say, okay, we're not ready right yet, but here's what we're going to do. You know, here's what you can do to get. These are the steps you can put in place so we can get you there. And that's I think that's probably the biggest key to our success, is that we're really tenacious. We'll make sure if we can't do it now, we're going to find out when and help them with that process.
So you will make a way and find a way, and you're just as determined as can be.
Absolutely, determination.
So what is, just for agents that don't understand that the distinction, tell me the difference between, you know, being a lender versus a mortgage broker, and why working with you as a lender is more advantageous to an agent than working with a mortgage broker.
You know, everyone's got different advantages, you know, as far as where they are. So really, what I can speak more so to answer that question is what is the advantage that we have as a mortgage banker. As a mortgage banker, we do our processing, our underwriting, our funding. Meaning the documents are prepared. All of that happens internally within our own internal system, and it just gives the control that's needed today to get things done. You know, for me, you know, I've done the large lender, I've done the little lender, you know, and I've done the broker side. My porridge is right, just right here. This is right for me, and if it's right for me, it's right for my clients, and I'm able to. Okay. This feels best for me. It feels best for our team, and so therefore I feel it's best for our clients, and it gives us that advantage that's important to me to get things done, and that is that ability to get things done internally. I really, really like that, and my clients give me that feedback that they like it too.
And I don't think that there's really any issue anymore with, well, you know, our type of loans are so limited as a lender. You're better off with a mortgage broker because I have access to more products, because the lender that you represent obviously has a huge portfolio of different products and programs.
Right. And that's another one of those questions to ask. Yeah, is to ask up front is what types of programs do you have? What else could I possibly fit into? You know, sometimes I think you know, one of the things that the CFPB is doing, which is a good thing, is trying to show people that there are other programs and products available to them. And I think oftentimes you know, they just don't have all those different options in front of them, and they can't possibly know. And that's why working with a lender who has a lot of experience and can explain each of those different types of programs is such an advantage to them as well. Sure,
sure. So what kind of advice would you have for real estate professionals? And keep in mind that this is, you know, being broadcast on the internet, and there are agents all over Florida and throughout the country that are watching this. So if you were talking to a real estate professional about what to look out for in selecting the right mortgage professional to partner with and recommend for their clients, what would be some of the advice that you have?
You know, the same thing that I would give to the clients. Again, it's asking questions up front, asking about their experience, making sure they answer the phone, making sure they're licensed, and that they do continuing education, that they're invested in their craft. it's difficult to get things done. And if you don't have the continuing education piece of it, where you're constantly sharpening that saw and looking for ways to assist your clients as a lender, that's not a good thing. You've really, you as a realtor are investing in your craft constantly with your continuing education, with making sure that you're coming up with different ways to get things done for your clients, different technology pieces, but also just that education side of making sure your clients have all of the pieces of the puzzle that they need when they're making their decision. The lenders that you are working with, whether for yourself or saying, hey, here's lenders that do a great job, that we've seen do a good job, and that are educated and continue on that path of education. You want that to be someone that you can feel confident that they're giving you that information, that they've got that education behind them. That is absolutely key.
I think so too, and especially when things changing so rapidly in our industry, you really have to stay on top of things constantly. And again, personally, what I would do is interview a few different professionals, and from a perspective of, would I want to work with them myself? Because if you talk to 5 different people, usually one of them will truly stand out and really stand out from the pack, so to speak. And then that would be the person I would want to work with. Where can people find you, Yvette, if somebody wants to connect with you?
Well, you can visit our website, which is www.myteamclaremont.com. We have our office in Lakewood Ranch. Our phone is 941-201-5847, and we have an office in Wisconsin, which is, you can dial the same number, or 920-347-1245, and of course by email, which you can email me at YvetteClermont@inlanta.com.
Perfect, and I'm going to post it also on in the comments so people can find you there as well. So in closing, I'm curious what your take is on the mortgage industry moving forward. I mean, in the past, I've heard a lot of people say that the reason that we had such a meltdown here in America compared to other areas like Canada, for instance, is because people really don't have any skin in the game. These no money down or 1 or 2% down mortgages, it's too easy to walk away from it, as opposed to if somebody puts 20% or 30% down. And it seems to me that we're almost back on that path with USDA and FHA and all these down payment assistance programs, where a lot of people are getting a mortgage without really having any skin in the game. I mean, what's your thought on that?
Sure. When you look at like VA and rural development that offer 100% financing, those loans have performed well. They really have. Certainly they've had their losses too, as many, but they have performed well. And part of that, in my opinion, is just they're underwritten well. And now loans are underwritten well. Even if you are coming in with very little funds, that ability to repay, which again, the vehicle getting us there is difficult because it's made the process so challenging, but the idea of it is sound. Making sure people can afford to make that payment is important. That side of it, with the underwriting side of it, I feel pretty confident. I mean, time will tell, where things go, but with the underwriting changes that we put in place, we have a pretty good portfolio out there. The time will tell what will happen with that, because we're still humans. We make mistakes, but for the most part, I think.
In your opinion, it's not the lack of equity that was really a problem, but it was really sloppy underwriting in the first place, and banks not really making sure that people actually had the ability to repay these loans.
Sure, that's certainly, I've heard that, and that's definitely been said, but now, that ensuring that we're really looking a little harder at people and the job time, the income that we're utilizing for approval. That underwriting side of it is definitely deeper than it's ever been. And I would think, as someone who's been in the industry for a long time, that should make a pretty big impact on those loss numbers. But again, we're still just human. We make mistakes, so time will tell. Time
So
will tell.
what do you think will happen with interest rates? Are we looking at rates going back up to 5,
Um,
6, 7,
Let me
8%
just get
anytime
my
soon,
crystal
or
ball for you on that.
okay?
And indicators that are out there, show that, it depends on who you're listening to that day, but the indicators that are out there all show that we're likely to stay stable, maybe have a little increase towards the latter part of the year. But again, they could go down, they could go up, or they could stay the same.
Spoken like a true politician.
Thank you.
Well, thank you so much for your time, Yvette. And is there anything that I forgot to ask or touch? Anything else you want to say
No,
before
I
we?
think I think we did pretty well. I appreciate your time today. It's really been a pleasure.
Well, I really look forward to working with you for many, many, many more years to come.
Thank you.
And I'm going to post your website and your phone numbers again at the bottom in the comments section.
Thank you.
And anyone out there watching this, if you're looking for an outstanding, not just a good, but a truly outstanding mortgage professional, give Yvette a call and just interview her and see for yourself. So thanks so much again, Yvette, and have an amazing day. And I'm checking here right now if there are any Q&As, but nobody posted any questions, so I guess we must have covered a lot of stuff. So thank you so much again, and take care.
Thank you. Thank you. You too.
All right, bye-bye.